Also, finding a 5x, 10x stock, a stock that's going to return you a good amount of money, and that would probably be in the EV battery materials space. So if you didn't know, if to have a good company you need a moat, and the moat of materials is if they've got a high grade, lots of things there, near a city. It means it's going to be cheaper to get out of their material out of the ground than it is something else that's got lower grade, further away, etc, etc. So petrol minerals, and also there's a thing of buy low, sell high. So when the material is low, like petrol minerals here, they could get the lithium out of the ground for 500 ton. In this case, it's actually spodumene. They get 7 tons of spodumene out of the ground. Send to China and they make 1 ton of lithium hydroxide from that. Anyway, the spodumene, they get out of the ground for 500 thereabouts. Sell for about 800 at this time. Fast forward, lithium gets in super demand, and they're selling tons on average about 2,000 to 3,000 a ton, though some people even buy it at 7,000 a ton. If you look at their latest auction, they have an auction off for any spare tonnage, and they were selling it for 7,000 a ton, costing them 500. So that was like $6.5 grand profit. They made $30 million on that sale. And who's buying it? China. So if you live in Australia, we got sweet old people. China's got millions. So buy low, sell high, get the right company, of course. Pearl Minerals, why they're the right company? Because they have heaps of tonnage, and they're sort of just in the right spot at the right time. So they were in the game. They were drilling for tin, and then it turns out there was lithium there as well. And then lithium became a thing. So like, whoa, we got all this lithium. Screw tin, we're going to lithium. So that's what's happened to them. One of my good stock picks was GL1 on the ASX. They were a neighbor to Pearl Minerals. That $40 million market cap when I bought them. I thought, oh, there's a pretty good chance they can drill, because they're already drilling. They already had a pretty good resource, and they decided to drill more. They were ahead of the rest of the pack, and so far so good. Mineral Resources, another big company who owns the other big place next to Pearl Minerals, bought into them, and so I see them probably going over $1 billion, where I might be selling, not sure, depending how they go. And the reason I didn't sell now, they're a bit high in price for where they are now, but selling, I want to get that capital gains tax deduction, and it's only hasn't been a year yet, so I knew that was going to be a peak. They've dropped down a bit, but I see them going up here more. So enough about lithium. Like, lithium was good to buy back here. Now it's a bit pricey. So the next thing I'm looking at is graphite. So people might say, oh, they want to get rid of graphite and go for silicon. But if you think that, watch this video here, and you see silicon isn't that easy, and graphite's probably going to be the way for years to come. Not to mention graphite will get cheaper, making it even harder for silicon to come in. They've already got silicon in batteries, but you can get up to 20 to 30% silicon, and the rest will still have to be graphite. And if you don't think we're going towards EVs, we are. So latest technology, CATL, they've got battery swapping technology. They've also got this here, where you can't afford a whole battery, so you just buy one battery that gets you around the city. And if you want to get further, you get more batteries put in as you need. You rent them out. So if you want to go on a trip, you rent the battery. Otherwise, you just pay for that one battery that you need driving around the city. And then if it runs out, you're obviously charging it home, or you can just go to a swap station. So that will be the future. And if you can just buy the whole battery yourself, then you can go for the Quinlan battery from CATL, which is gets you over 1,000 kilometers if you're going the nickel-based one. And yeah, so the tech is just getting better and better. And graphite's going to be in there. Lithium's going to be in there. And the limiting factor on lithium batteries is actually lithium. We probably will go to sodium ion in the future because it's more abundant and all the materials are abundant. So if you didn't know, right now we're going to LFP batteries. That's lithium iron phosphate. So lithium iron and phosphate in the cathode and graphite in the anode, because it's the cheapest and it still gets you the distance needed. So where will the money be made? So all this is good, but where will you make money from this, knowing this information? Well, my prediction is graphite. So back here, you did the sums in these companies. They weren't good, that's why they didn't go up. Fast forward, lithium gets higher in price. You do the sums again, you're like, wow, that's cheap. They're going to make $100 million a year and they're only costing $50 million. So if you look at this chart, a lot of these companies will be making $100, $200 million a year. And right now you can buy them for less than that. So Mason Graphite, 66 million tons, high grade. You can buy this company for $40 million Canadian, and they'll probably be making $100 million a year. But then fast forward, if they get into production and the price is double, they're going to be making double that. So that's where you're making money. Tugger Resources, very good. They've grown. Mason Graphite hasn't grown yet, so it's a good one to buy in my opinion. You can buy metals MLS on the ASX. Who were pretty good at 26 million. That might be incorrect. Always look at this for pricing, not Google. Will give you the market cap you need. 29 million, so it was actually around about correct. So they got a pretty good resource as well. Pretty decent. But you can buy a similar one to MLS for only $4 million. The reason no one buys it is because it's on the TSXV. And that's cheap. You can buy this for $4 million. They got $2 million in cash, and they've got a higher grade resource. So this company here, Green Battery Mills Inc., is right next to Mason Graphite. So they got same grade. They've only got 1 million tons contained, so a tenth of the size, but a tenth of the price. So the difference is Mason Graphite just drilled it out, where Green Battery Mills Inc. is currently drilling now, and we'll have to expand the resource. They actually have videos of them finding the graphite. So it's a real thing, and pretty high return, sort of high risk but high return, very high return if they succeed, and they'll just be going here's them like actually drilling into the ground. So we're going to need that graphite eventually. Also another thing, you can get synthetic graphite, which is made from petroleum coke, so it's a byproduct of petrol. So in the future we're going to less petrol, meaning we'll need more natural graphite because there'll be a strain on synthetic graphite. Well, that's my opinion, and it's a logical stance as well. So what else can I say? Other good ones. So in Africa, it costs a lot less to build the mine. So these Metals Australia, they might have to spend 100, 200 million, where in Africa, they can spend half that because the labor is so cheap. But then there's sovereign risk as well, if you believe in that. See, Trident Minerals here actually lost this mine because it was use it or lose it, so they didn't get the lease renewed. Government took them away, they lost that. They have this one as well, it's pretty good. So a lot of these companies too, they won't build the full capacity straight away. They'll build 10,000 tons as demand's needed, and in the future they'll spend more money to get more out of the ground and process more. So good picks will go down. Northern Graphite's bought up a few different players, and also these aren't correct now. This is an old study, not sure the year, 2021. So these numbers have changed, and stuff has changed, such as these guys getting this mine taken away from them. So good ones, Renscore, but they have very high. They have 400 million plus. So X's have been diminished. Also, although they can grow large. Magnus, large resource, downstream technology, but I think they're 300, 400 million price tag. Vault Resources under 100 million, and they've got downstream, big resource. They've actually got a working mine in Ukraine that's getting graphite now and selling it out of the ground, which will probably give them $5-10 million a year. And if the price doubles, they'll be getting $20 million a year just off that mine, which is a $100 million company. And then they get this into production. Sky is the limit. So even if production's not getting any closer, the price of graphite will probably go up, and these will just get re-rated on people doing the sums and saying, wow, money to be made. So they got a contract with Tesla. They're a $1 billion company or more. Ecograph doing recycling. Focus Graphite, pretty decent. Similar to MLS, they're like close to each other. Telga, good, but they've grown. Telga's probably very good. If you look at the numbers of Telga, they're going to make a heap of money. So even from their 500 million price tag, whatever it is, there's still room for growth there. They got really good location near all the battery factories in Europe, hydroelectricity, etc., etc. So that's Telga. So my pick, Mason Graphite, because it's so small. And on a graphite re-rate, which I think will happen, they'll get re-rated a lot more than $4 million. Also a nice one. Oh, sorry, I was pointing at Mason Graphite. I'm talking about their neighbor, Green Battery Minerals Inc. So back to Mason Graphite, $40 million. They've got the resource there. They just have to wait for the demand to come, and then they spend the $200 million or whatever it is and build it. Another thing with these Canadian ones, the American government wants to help them out. Same with the Australian one. Oh, and one not on this thing is IG6, which is pretty pricey. They're not 30 million. I think they're more like 50 million. 64 million. So that's why you never trust Google. Could lose you all your money. So IG6, pretty good company. They got the downstream. They do a pilot plant at the moment to turn graphite into spherical graphite and then coat it to get into anode technology. They got a good resource, which they just have to drill out more. Nothing. All these companies, it's not the resource. Like, if they want to spend more on drilling, they can easily up these resources. It's more just waiting for the graphite demand to come, which isn't here yet because there's not enough EBs per year. So it's going to be a slow process. So back to IG6. Where are we? Sorry for taking my time. These are not edited videos. Operation Springdale. So they bought this mine of Comet Resources. Comet Resources got 25% of them, and they gave them this mine. So they're going to get it out of the ground here, which is pretty good. 17% for 2.6 million tons. That gives them nice data. Take in mind they've got a lot more drilling they can do and uncover more resources. So that's where some growth will come from. Like, they're going to drill and find more. It's pretty likely. So why not buy beforehand before they announce resource upgrades, etc. So anyway, they truck it to the place where they're actually doing a pilot plant now to change it from the stuff out of the ground into spherical graphite and coat it like that. So they got the mine, they got the downstream. So the moat is they got the material, they got the technology behind the downstream, and pretty good. The straight, you see Renderscore, which is Renderscore. Where are we? Renderscore here. Really good resource, everything, and they're getting a free loan from the government or cheap loan from the government. So that's what could also happen for IG6. So when they want to spend the 100 million to build the mine, whatever, they're not struggling to raise the capital because the Australian government wants them to get going. So it's going to say, here, have this money. It's going to be great for Australia, etc., etc. So that's another bonus with these companies. So this could be a very good one. I like this one. It feels like a GL1. When GL1, I got a good feeling about IG6. Maybe it's subconsciously that everything's going to go right. I don't know. But it just seems good to me. So it's going to be, not much more I can say. So picks, IG6, I'm invested in them. Mason Graphite is pretty good. The only thing, you have to buy it on the TSX, which is a bit more effort for someone in Australia. Telg is good, but I think it's pretty grown, so although it probably will go well. And saying that, all these, if there's a re-rate in graphite, which should come, the price will go up, so is the price of all these things. And the thing is with this one, it's $4 million. They have really high grade. Like, look at the grade there. It's all over his nose. So they've got to drill it out more. And yeah, so for this to 2x, it's a lot easier for this $4 million stock to 2x. Like TSXV. Like, I think I was buying it. I'm actually down quite a bit in this stock. But I was buying it. And when I was buying it, the stock price went up. So if someone big wants to come in and buy some of this stock, it's just going to shoot up like so. And it's so low at the moment, and probably there's no hope there. And then when there is hope, it's going to be too late. So if I didn't already put so much money into it, I'd probably buy a lot more here, although it is quite risky. It's just so small that it makes sense. And down in the doldrums, it's when you buy. When there's no hope is when you buy. When there's hope and everything, that's when you sell. It's hard to do, but it just is the right thing to do, in my opinion. So thanks for watching. So give me your thoughts on graphite and silicon. There is people doing 100% silicon, but I don't think the cycle life is there. Watch this video. It'll tell you everything about silicon versus graphite. This guy, he was saying 60,000 ton prices for lithium, and I was like, well, that's a bit rich. And soon enough, a month later after he said it, or I watched this video on Rockstock channel, that was the price for lithium. So he's saying the same thing for graphite, so I might actually watch this again myself. And yeah, so slowly but surely we're going to electric vehicles, and slowly but surely we're going to need that graphite out of the ground instead of synthetic graphite, because we'll be using less petrol. And that's it from me, and I'll see you in the next video.